Hi, this is Dave Dirks, co-author of the book, The New Marketing Analytics. I want to follow on a clip that I did a few weeks back on behavioral versus predictive analytics, and actually spend a little bit more time around some of the things that can vary a marketer's ability to predict a buying behavior. And of course, much has been written about the opportunity within predictive analytics, about the ability to use a tremendous amount of the data that's available to us today, our big data opportunity, as it's called, and to be able to create from this large amount of growing data an ability for marketers to predict when someone might be inclined to purchase their product or their service. So that's the promise. But of course, there are a couple of what I'd like to consider impacts to the predictive analytics algorithms that need to be built in order to be able to create a predictive model. And there's a lot of complexity we're not going to get into in this clip in terms of building those algorithms, but suffice it to say, those are very complex algorithms. And even before those algorithms are built, there are, I think, a couple of very important things that marketers need to understand about predictive analytics. And there are three things that impact your ability to have an algorithm that eventually can help you predict behavior. And I qualify that as such, as predicting behavior. The three things that I think that impact the predictive analytics model is data accuracy, data refresh rate, and data variability. And I'm going to talk briefly about each of these so that you can kind of understand that well before you get into the spending and making the investments in predictive analytics, you really need to have kind of like the basics or the foundation, sort of this particular triad set up. Let's take the first one, which is data accuracy. Now, I know it sounds pretty obvious, and I'm at the risk of oversimplifying it, but quite frankly, if your data, garbage in, garbage out, if your data isn't accurate, there's just no way that any algorithm that you're going to build is going to be able to prove itself out as a way of predicting buying behaviors. So having accurate data coming into your enterprise is absolutely worth every bit of investment. And before you spend a nickel on behavioral analytics or predictive analytics and any kind of analytics that's going to require you to build algorithms, you make sure that for the various areas that your organization collects data, whether it's CRM for the sales side, the marketing side on campaign data, customer service data, manufacturing operations, etc., all those data sources, which in aggregate can help you build a much more accurate predictive model. If there's a flaw in any bit of that accuracy of that data, then you're going to have problems. And of course, if you look along the continuum I'm showing you on the screen, you can see that basically as you move along the time scale, as you try to predict behavior moving out beyond just this minute, but into the future, you can see that accuracy diminishes greatly because of the impact that data accuracy has. The bigger the gap in your data accuracy, the bigger the gap you're going to have in predictability. Not rocket science, but very important to understand, because I think a lot of companies forget to spend the time making sure that their data is accurate. Let's take a look at the next piece, which is really data refresh rate. Now, what makes the predictive analytics, I think, very, very possible is the fact that businesses today can collect information at a velocity and at a refresh rate, meaning that customer data sets themselves refresh at a fairly high rate. And the higher that refresh rate, the better or more improved your ability to build an algorithm that'll predict buying behavior. Of course, again, if you look at this chart that I have here, in terms of data refresh rate, you can see, again, same principle, a predictive accuracy is impacted by the gap between refresh rate. So if you have a refresh rate that's 30 days or a week or 3 weeks, it's very difficult for an algorithm to be very accurate unless it gets a refresh of data fairly frequently, like within the minute, but within 24 hours would be certainly within reason. But the better the refresh rate, the more accurate your predictive algorithm is going to be. And of course, let's take a look at the last piece there, which is data variability. Now, data variability is pretty interesting because data variability is, there are so many variables that go into predicting anything. I'll give you a classic example, weather, for example. We have lots of data, real-time data on weather that's been accumulated for decades and decades and decades. But as most of you know, most weather forecasts are generally accurate within the first 24 to 48 hours. And even if you get beyond 24 hours, you have a lot of variability because there are so many variables that impact the outcome of the weather. Whether it's going to rain, whether it's going to snow, whatever the predicted forecast is. The farther you get from that, and the more variability you have, more variables that you have that can impact your prediction in terms of weather, it's going to make your weather forecast less accurate. And you've seen, as I have seen, forecasts generally that can go up to 7 or 10 days out. They're accurate within a percentage, but they're not even close to 100% accurate. They're not even close to 50% accurate. And if you go beyond the 7 and 10 day window, which is about as far as you can go in terms of predicting weather patterns with any reasonable accuracy, then all bets are off because now you're playing with so many variables. So again, the gap that you see on that chart showing data variability, the wider and the more data variables that you have that can impact weather. Think of weather as sort of behavior. There are a lot of variables that can impact whether a person decides they're going to buy or not. Buying decisions, most marketers, most of us have to remember are emotional decisions. So predicting the time that a consumer is ready or emotionally ready to buy your product or service is very difficult to do in any long-range way. It has to be, again, the variables have to be real-time data, and accurate data helps reduce the data variability to some degree. But again, these three things, data accuracy, data refresh rate, and data variability, all have an impact on your ability to create a marketing model that allows you to predict behaviors. This is kind of like a caution there built into what I'm telling you today. Anyway, we're still excited about predictive analytics. We think that as the technology improves and our ability to build algorithms that take advantage of the vast amount of big data that we have, predictive analytics will certainly be important. For more information on marketing analytics, check out our book, The New Marketing Analytics, at Amazon.com, or go to our website, www.newmarketinganalytics.com. This is Dave Dirks. I appreciate your time. Have a great day.